Joint Ventures, Theory and Principles. Dear students, today let us learn about joint venture accounting, theory and principles. Joint ventures. A joint venture is practically a partnership between two or more persons confined to particular venture or piece of a business. The venture may take the shape of a joint consignment of goods, a speculation in shares, an underwriting of shares or debentures, or a new undertaking, or any other similar form of enterprise. Where the buying and selling on account of joint venture is managed by one of the parties, all the transactions are recorded at the place of business. The amount contributed by each party is credited to his personal account. A joint venture account is opened and debited with the cost of the goods purchased and all the expenses relating to the venture. The same is credited with the sale proceeds and closing stock, the difference representing the profit or loss on the venture. The share of profit or loss of each party is credited or debited to his personal account, and final remittance to or from each party will close all the personal accounts. Where a separate set of books is maintained and a joint bank account is opened, the record of transactions does not differ in any way from ordinary partnership transactions. Each partner's capital is credited with the respective contribution, and the profit or loss arising from the venture is divided in the agreed proportions. Where the transactions are effected by different parties to the venture, no separate set of books is maintained and no joint banking account is opened. Each party would then record into his own books the transactions that he has entered into on account of the joint venture. On completion of the venture, each party would render an account of the transactions effected by him to enable a joint venture account to be prepared by all the parties in their respective books. On the final result being ascertained, each party will debit or credit the joint venture account in his own books with his own share of the profit or loss and transfer the same to his profit and loss account. The share of profit or loss belonging to the other parties to the venture will be credited or debited to their respective personal accounts. The balance on the personal accounts of the other parties will then indicate their relative position with each other. In the next lecture, we will solve a practical problem on joint ventures where books are maintained separately by the parties.